Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 16th of May. Starting off with the FTSE 100, which looks as though it's run out of steam before the 8,500 level that we were looking for. That's the rising trend channel there from January. I suppose nominally we hit it at the 84.74 peak, but the way things are looking, probably need to have a test of 83.30.40, which was resistance on the way up, before another fresh attempt at cracking that 8,500 level, which we've been waiting for the top of that channel from 2007 to be hit for obviously quite some time. Moving along to the DAX, and here this was a market shadowing the FTSE to new record levels. At the moment, still favouring a test of support if it's required around 18,500, 18,600. Then a move up to the top of that rising trend channel from October, as high as 19,400 by the end of next month. Worst case at this stage is back to the 50-day line and back to 18,200, the late April resistance. Moving along to the Dow, and here you can see that we have been pushing very nicely higher, rising trend channel there from September, October again, and the top of that channel currently pointing to around 41,300. We're looking for that by the end of next month, especially while we remain above recent support, 39,400. Worst case is that we've got to test that rising 50-day line to 38,800 before we make it to the top of that rising trend channel. On to Bitcoin, which has been a bit sheepish of late, and here you can see that we had the bounce, the higher low versus the initial May support there around 56,600. We had a higher low there above the 60,000 level, and then we've broken that March resistance line, and the 50-day moving average is now at 64,500. Above that, looking for this market to retest the highs of, well, the record highs in fact, towards 72 to 73,000 by the end of this month. RSI at 57, so it's right in the good place now. We've unwound the RSI failures near neutral 50. There were at least 3 of them in April, May. And so it looks as though this is significant in terms of the upside. In terms of what we don't want to see, it's still an end-of-day close back below 60,000. On to gold, which was struggling a bit the last time we looked at it, but we seem to have revived ourselves off the floor of that rising trend channel from February. We said before above 23.65, we're looking for 24.48, which was the record high, and hopefully we'll get that by the end of this month. In terms of the upside, probably that upper parallel there a bit too steep. You could say that the best case here is that we hit the top of that channel there. The resistance line there from back in January is high as 25.85 by the end of next month if everything goes well. On the downside, not expecting anything now lower than the 50-day moving average, currently rising at 22.90. RSI's had a bounce above the neutral 50 level, which is a good strong signal, and obviously that's why we've got our rise today. Moving on to the stocks, and we're reminded of copper with Asiamet, and here you can see a bull flag breakout, and above the 1.3 pence level on an end-of-day close basis, we're looking for a higher target there, the upper parallel of the other targets that we've had. So above 1.2, looking for 1 3/4 pence, hopefully by the end of next month, or even sooner. Nice to see, or it would be nice to see an end-of-day close above 1.3 for today. Moving on to BT, which had a decent announcement today, many positives there. The main positive, obviously, as far as the charting is concerned, is that we've gapped above the 200-day moving average. That was down there at 114, and the view now is that above the initial February resistance at 118, we're looking for as high as £1.43 by the end of next month, which is a resistance line projection from June last year. Let's see if the stock will finally behave itself. Interesting that obviously in the days before today's announcement we had the breakout, so maybe 1 or 2 people guessed that the company would have good news. On to Cornerstone, which had a bit of a knockback, but is bounced now off a rising, double bounce off a rising 50-day line, also the floor of that rising trend channel from August. Above the 50-day line, currently at 34 pence, we're looking for 50 pence as soon as the end of next month. That resistance line there probably could be drawn a little bit better, but I think that is about the right fit. In fact, 52 pence possible by the end of next month if everything goes well. RSI now back above neutral 50. Onto a stock which I don't normally look at, probably nobody else looks at very much either, but Clean Power Hydrogen, just the first sign here that we've bounced, had put in a proper higher low and bounced off basically what was late February support there around 11.5 pence. Above that, looking for the red resistance line there from October at 20 pence, perhaps as soon as the end of next month. Moving on to a stock which is practically unheard of and almost impronounceable as well, Diaceutics, but here we've had an unfilled gap to the upside yesterday above a rising 50-day line, and that's a pretty decent looking breakout in the making, above £1.10 on end of day close basis, looking for £1.30 by the end of next month at the top of that rising August trend channel. Moving on to Genincode, which I covered a little while back, looks like it might be ready for fresh moves to the upside. We bounced above bounced above the 200-day moving average, the rising 50-day line there at 6.8 pence. The view at the moment is that the longer we stay above that 200-day line at 7.4 pence, the greater the chance of the move to 11.5 pence by the end of next month, which was the old support before the September breakdown. Incanthera is next, and a nice move here for an aqua stock, all too rare, obviously, given the state of that market, but it's a special situation, and gapped up here back in March, just breaking the old March peak there at 17 pence. Above that, looking for 24 pence, hopefully by the end of this month. Could be up to 30 pence plus by the end of next month. A very strong chart there with that U or saucer-shaped bull flag, as I would call it, after the unfilled gap to the upside. On to IG Design, and here another stock which is behaving itself from a technical basis. We had the turnaround there, the massive unfilled gap to the upside, and hit our initial target there around 170. After that, we were looking for up to £2.23 in this case. Hopefully we could get that by the end of this month. And the other positive at the moment is that we're going into a golden cross, 50 and 200-day lines rising. That tends to be the strongest part of the cycle. Only back below that initial May resistance at 182, really delaying the upside scenario. Another stock which I don't normally look at, but is going great guns at the moment, is KP2, otherwise known as Core Potash. Here we've had a gap close, a double gap close buy signal there, which was basically at the start of the week, and the top of the channel there, or at least that resistance line there, heading for 1.25 pence. Looking for that hopefully by the end of this month, and what a chart that is, if or would be, if we can get up to 1.25 pence on that situation. You can also see that 50 and 200-day lines both rising, so it looks as though the market quite excited on that particular situation. Another rarity coming up here is Nexus infrastructure, and here too much to resist as well, with a bear trap gap reversal back from below the old November support there at 74 pence. Above that, looking for not only the resistance there from back in February at 97 pence, which obviously should be done probably by the time I publish this video, but up to £1.40 by the end of next month. So very encouraging looking chart there on Nexus. And if you want to add in the extra technical detail, there's bullish divergence as well, so lower lows for April and May, but a higher RSI uptrend line. On to Phoenix Copper, where it looks as though the white smoke is above the Vatican, the company announcing the bond subscription, which we've been waiting for. Obviously, one or two people guessed that might be on its way from basically the end of last month. We had that final shakeout there, which was even more interesting back in the basically last week, and up here for this week. But the situation now is that we had our second target there at 19 pence, and then the third target 23 pence, which has been hit. I suppose once the dust settles and people work out exactly what's going on there, we could have another leg to the upside as high as 30 pence plus by the end of next month, while we remain above the 200-day line at 18 pence. I think that's probably the best line in the sand there. You might be able to get it up to 20 pence in terms of an end-of-day close stop loss back below today's gap floor, but probably the 200-day line, the safest thing there for Phoenix. On to the last three, and the first one is another relative rarity, RBG Holdings. Here, just the first signs of a rising trend channel base. Great candle yesterday and today. 50-day line also rising, which is helpful, and that suggests that we could at least get up to 13 pence, perhaps, as soon as the end of this month. while there's no end of day close back below 8 3/4 pence recent support. On to St James's Place, which is a requested stock, and obviously from a fundamental basis, a little bit of a horror story, but just a chance of an intermediate rising trend channel here, that in place since April. Floor of the channel there currently around £4.68. Top of the channel there as high as £5.45, and that's the target we would be looking for by the end of next month if everything goes well. What we'd like to see here is the 50-day line starting to rise, and obviously no break back below yesterday's bear trap low at £4.72, which is effectively also echoing that price channel floor. But best case here would be for the shares to get up to the 545 area, especially as that was also the floor of the massive gap down that we had back in February. But still a bit early to say whether this is a full recovery or a bear phase rebound. Finishing off with another requested stock, Verici, and here you can see that the overall pattern here is potentially that we've got a rising trend channel there from March last year, but we need to break that red resistance line there from May at 10 pence to give us a potential move to 20 pence in the summer. Ideally, obviously, there's no further weakness back below the gap, the top of the gap there from November, 6.9 pence. That's it for me today. More updates tomorrow.